Hey everyone, it's Jack, and another week is in the books, so it's yet again time for another portfolio update. In today's video, I'll be going over my WealthSimple portfolio, where my goal is to bring a $1,000 account up to $100,000 through saving like crazy and smart investing. So I deposit around $200 or so every single week into this account in order to stay consistent and invest on a consistent basis and just consistently dollar cost average into the stock market. In this video, I'll also go over all the stocks I bought last week. I started one brand new position, which I'll talk about. And then at the end of the video, I'll go over my weekly watch list for the week ahead and what stocks I'm planning to buy going into next week. And I'm actually going to be planning to buy an exciting new growth stock and add it to my portfolio. So I'm excited for that. In terms of the stock market this past week, it was a super eventful week and there was actually a lot going on. A lot of things happened, especially with stocks within my portfolio. But as the stock market in general, we actually saw a really strong start to the week. But then on Thursday and Friday, we saw two brutal days back to back. In Canada, it was actually the worst two back-to-back trading days we've seen in over a month. So it was that bad. We saw around a 2% swing in both the Canadian and US stock markets from Thursday and Friday. And this was really spurred by the fact that the Fed and Jerome Powell down in the States came out and just said what everyone was thinking, that inflation is actually rising a lot quicker than people expected to. And basically they came out and said that they're going to have to hike interest rates in order to try and fight this. And when interest rates go up, it usually means the stock market doesn't perform as well. Before we get any further, let us all know down below in the comments how your portfolio did this week, with the Thursday and Friday being pretty brutal days. Did you stay in the green? Were you in the red? Let us all know down below. Curious to find out. So jumping into my account status and where my account currently sits, it currently sits at $6,333.12. And we're actually up Friday $20.17 or 0.32%. However, I think this might be a mistake with Wealthsimple because I did add a deposit here on Friday of around $25. So I think I was actually down $5 on the day. I think it takes it into account. And if we go to the week, I'm actually up $32.17. So we were in the green 0.51% for the week. However, I do think, again, that $25, if you take it off, I was up only actually $7. So it's pretty much a break-even week. And if we now check the status all time, we are still up 1.43% or $89.12. So the account is still in the green. And there are a few stocks that are really holding us back. And those actually did even worse this week. So we'll get into all of that now. And now let's go over my stock positions and show my passive income through my investment. Alrighty, so here's my stock portfolio spreadsheet where I track all of my stock positions and the breakdown, as well as my passive income from my dividends. Let's start it off with all the stocks that I bought last week, and we'll kick it off with the brand new position in my portfolio, which is actually my first US stock. It is Pepsi, ticker symbol PEP. This is one that I bought last week and started my position in. I only have one share, as it is a bit of an expensive stock. It trades around $145 American. And I started this position in Pepsi to get some more exposure to the consumer staples sector. And Pepsi is really one of the top dividend stocks in the sector. It's grown its dividend for 49 years straight in a row. So this is one that I plan to hold for the rest of my life. And I added it to my RRSP account so that there's no withholding tax on the actual dividend income, which is great. Unfortunately, I bought my Pepsi share on Thursday and then it dropped over 2% on Friday. So I am down on the position to start. And it's one that I'm going to dollar cost average into and continue to add more shares as I go. The second stock position that I added to last week is all the way at the top, Algonquin Power and Utilities, AQN. I picked up one more share of Algonquin Power because there was some big news that came out with Algonquin Power. It started out the week really nicely and was going up. However, in the middle of the week, it was announced that Algonquin Power is actually raising more money by selling more shares by doing an offering, which dilutes all the current shareholders. So with this news, Algonquin Power the very next day dropped 5% on the opening of the stock market and dropped all the way back down to around $18.50. It has gone up a little bit since, as you can see. It was up 0.75% on Friday. So I did buy one more share on a huge drop, that 5% drop, as I truly love Algonquin Power and Utilities as a dividend growth stock moving forward. And it does make up the largest position in my portfolio at 8.7%. The next stock that I added to is another dividend stock, and it's Manulife Financial, ticker symbol MFC. This is one that's been really struggling as of late. Ever since I started my position in Manulife, it's really just been going downhill since. So I continue to dollar cost average every single week, and I really just pick up one share here and there. But you can definitely see that I'm down 5.5% on it currently, and it does make up 4.9% of my portfolio. So it's not a huge chunk, and I'll definitely continue to pick up a share here and there, as this is another really great dividend growth stock here in Canada that just continues to raise its dividend on a yearly basis at a really healthy rate. The next stock I picked up was Smart Center's Real Estate Investment Trust, ticker symbol SRU. This is a monthly paying dividend stock that is a REIT, and it experienced a little bit of a drop with the rest of the market, as it was trading around $30 per share at the highs, and then it dropped down below $29.50. So I just picked up one more share to just help boost my monthly income. The next big purchase I made last week was Canadian National Railway, ticker symbol CNR. This is a pretty expensive stock, so it is is a big purchase whenever I buy a share. Unfortunately, like with Pepsi, I picked up a share of Canadian National Railway on a small dip on either Wednesday or Thursday. I bought a share around $132, and then on Thursday and Friday, it dropped even more, so it's now below $130, which I think is a fair price to be buying. And I am going to continue to add to this position, as I am currently down on it around 2%, and I do want to gain more exposure to the industrial sector, so definitely going to add this one to my weekly watch list. The next dividend stock that I picked up a share of was Kirkland Lake Gold, ticker symbol KL. This is a gold miner here in Canada, and unfortunately, again, I picked up one share of Kirkland Lake Gold. I think it was on Wednesday, in the low $51 range, and then the very next day the Fed came out and released their news, which actually sent gold down quite a bit. It dropped around 5%, I think, the next day, and Kirkland Lake Gold began to tumble again on Friday, down another 3% or so. So in total, Kirkland Lake Gold dropped around 10% from Thursday and Friday, which is super unfortunate. I wish I had picked up my share on Friday at these lower prices, but oh well, what can you do? And then I also picked up a few shares of two of my growth stocks, the first one being Greenlane Renewables. The renewables sector took quite another big hit last week, which is again really unfortunate. As you can see, Brookfield Renewables dropped last week. It's now down around 10% for me. H2O Innovations, another one of my growth stocks, is now down almost 25%. My biggest loss to date, sitting at minus $125. And then Greenlane Renewables is down 30% for me and dropped around 10% on Thursday and Friday combined. And as you can see on Friday, it was down over 5.5%. So on Friday, I picked up 10 shares of Greenlane Renewables at around $1.30 per share. However, I would be a little bit cautionary with this one, as there doesn't seem to be a really solid support level for Greenlane Renewables. So this is a stock that could tumble down a little bit further. Hopefully there's some good news that comes out and tries to shift momentum back in the upwards direction. As again, all of my growth stocks are ones that I plan to hold for at least 10 years. These are all growing companies in growing industries, especially in the renewables space between H2O Innovations and Greenlane Renewables. These are companies that are growing really well quarter after quarter, and they're in industries that are still in their infancy. So I'm really excited about these ones long term. The second growth stock that I added 5 shares to was my MCI One Health Technologies position, DRDR. This is one that I haven't really added to in a while. I've just been letting it play out. However, I've come to the decision that I want to get all of my growth stocks kind of in equal weightings, around 3 to 4%. So there's a few that I want to bring down in weighting, such as H2O Innovations and Standard Lithium. And there's a few that I want to bring up in weighting. The first one being DRDR, MCI One Health, as it's currently the smallest position in my account, sitting at 1.5%. So those are all the stocks that I bought last week. I did trim one position. It was Standard Lithium. Standard Lithium had an absolutely insane week, up almost 20% on the week. And you can see that I'm currently up 27% on Standard Lithium currently. So I trimmed around 10 or 15 shares of Standard Lithium. Again, just to try to get my growth stocks all down to that 3 to 4% range. Is definitely a range where I feel more comfortable with my positions. When it comes to my dividend tracking, we had another really strong week because we added so many different dividend stocks to the portfolio. So we can see that our annual dividends went from the previous week being at $162 to over $175 this week. So an over $13 increase by just adding some dividend stocks this week. And our monthly average jumped over a full dollar. So we're now getting around $14 every single month for the rest of our life through our dividends. And our total portfolio dividend yield got boosted up a bit to around 2.7%. And if we look at our monthly dividend income kind of visualization that I have here, this little chart, we can see that we got some dividends last week. So now our month of June is our largest month to date when it comes to actual dividends that we've received. We've currently received $9.19 in the month of June, and there still is a week left. So hopefully we rack in a little bit more. Maybe we'll break that $10 mark, who knows? And again, this chart is just going to show every single month by adding to dividend stock positions how our monthly income is actually going to grow, and you're going to see this chart just continue to go up and up and up. I know that July is going to be a really good month in terms of dividends, so we're definitely going to break the $10 mark in July if we don't this month. So now looking at our portfolio breakdown chart where we can kind of see the weightings of each position in my portfolio, this hasn't really changed a whole lot. However, it is starting to look a lot more uniform. There's less stocks that take up huge weightings in the positions, and there's less stocks that take up, only 1 or 2%. They're really all kind of in that sweet spot that I said. That kind of 3 to 7% range is where the majority of my stocks lie. And that's kind of how I like it for diversification reasons. A nice, well-rounded, balanced portfolio, which brings us nicely into the sector allocation, which was really the focus of why I picked up certain stocks last week. I really wanted to boost up certain sectors that were kind of underrepresented in my portfolio, which was the consumer staples sector. So I picked up the share of Pepsi to get some more exposure there. And then was also the industrial sector, which currently I only get exposure to through my Canadian National Railway position. So I picked up one more share of CNR last week. So you can now see that industrials are 6.1% and consumer staples are now 5.2%. So I'm still going to try to boost these up a little bit more, by adding maybe another share of Pepsi or another share of Canadian National Railway. But overall, I'm really happy with this chart as we're starting to see more of the sectors really start to be equal weightings when it comes to how much of they represent in my portfolio. And in terms of my asset allocation chart, we can see that the breakdown currently is 59.1% dividend, 21.7% ETF, and 19.2% growth. So I usually like to have growth around 20%. That's kind of my long-term goal. So it's definitely a little bit underweighted right now. And as you'll see in my weekly watch list, I'm going to be adding a brand new growth stock to my portfolio. So that's going to help to boost that up over the next little while as I can focus on adding to my new position. So now we can go over my weekly watch list for the week ahead. And top of the list in terms of growth is my brand new stock position that I'm going to be adding next week. It's Data Communications Management Corp, ticker symbol DCM. And I'm actually gonna have a full breakdown video on the stock coming out, I think, Wednesday. So definitely stay tuned for that. This is a penny stock that trades just above $1 currently, and it's been absolutely going crazy over the past month. It's up over 50% in the last month, but I think it's still extremely undervalued at these current prices. It's a company that's just made a huge pivot in terms of its business model and is really starting to adapt and use technology to help drive revenue. And this is what really excites me about this company. But again, I don't want to give too much away. I'm going to be doing a full video on the stock and talking about why I'm going to be investing in this company. So I'm going to be looking to have a starter position this week, probably pick up 30 shares or so. Again, it only trades around the dollar mark, so maybe 30 to 50 shares. And then like I said, I also want to continue adding to MCI One Health, ticker symbol DRDR. I'm going to add around 5 shares next week, hopefully under my average cost. Dollar cost average, bring my average cost down. And then in terms of dividend stocks, it's pretty similar to last week. I have Pepsi up there. This is for my RRSP. I want to add one more share, hopefully below $145, as it's currently sitting really close to this price after the dip on Friday, as it dropped 2%. So this is a no-brainer to put in an RSP, saving for retirement, and just let it grow there for 30 plus years. And then the second dividend stock is Manulife Financial, ticker symbol MFC. I'm going to add hopefully one more, as this stock just continues to go down, and I am down over 5% on this position. But I think this is a great long-term dividend growth stock as they are expanding rapidly in the Asian markets, which again, I've talked about here on the channel. So I want to add one more share to Manulife Financial. I might also pick up a little bit of Algonquin Power if it stays down. And then the final dividend stock is Smart Centers, ticker symbol SRU. This one's just been absolutely killing it for me. I just continuously pick up around one share of Smart Centers every week or two, and it's been doing really well for me so far, and it is a monthly paying dividend stock. So that's kind of my weekly watch list for the week ahead. I'm really going to be starting a brand new position in Data Communications Management Corp, DCM. Just going to start a starter position, probably of like 30 to 50 shares. And then I'm also going to continue to focus on building up some sectors that I'm still not as strong in terms of weighting. So I'm going to add another share of Pepsi to bring up my consumer staples sector. And then I'm also going to add a share of Canadian National Railway, as it is currently down for me. And I'm going to boost up my industrial sector at the same time. And then with any leftover money, I'll probably just throw it into some stocks that are down for me, whether it be Algonquin Power and Utilities, as they did just do that offering last week and the stock dropped around 5%. It was doing really well up until that offering. And then Manulife Financial has also been getting beaten down over the past few weeks. So maybe if it stays like that, maybe I'll add one more share there. But let me know and everyone else in the comments section what you guys are planning to pick up, as we did see that dip on Thursday and Friday. So there are a few buying opportunities open. So definitely let us know if you're taking advantage of these dips. And if you are, what are you picking up? But I hope you guys enjoyed this video. As always, smash that like button and subscribe to the channel. Lots more content coming your way. I'll see you in the next one.